August 23rd, 2024. Today, well, yesterday was an outside day. So I think it's really important that yesterday was an outside day. And because yesterday was an outside day, the next day, the following day, today, opened basically right around the midpoint of yesterday. And when you get a large outside day, up or down, and then um, the following day opens around the middle, there's an increased chance that you get some sort of inside day. So there was an increased chance today that we were going to get an inside day, and we did end up getting one. Bar one, a bear bar, but a tail on the bottom. So not really worth selling. The bears are hoping that this is a big gap up, or the bears are hoping the gap up is going to end up being a bull trap, and they wanted bar one to close on or near its low so that they could sell for a swing down and a potential high of the day. However, the gap up is probably going to get a second leg sideways to up. The bulls, everyone sees this as a potential higher low, so maybe we're going to go a little higher and get some sort of double top from this area, but not really all that great for the bears so far. The bulls see the gap up as the start of a new bull trend, and bar one is the first pullback in their bull trend. So I think it's okay to be long. Or sorry, I think we're always in long is what I meant to say. So we're probably always in long from the gap, and bar one pullback for the bulls. We have an inside bar on bar two. So bar one, big gap up. Bar two, inside bar for the bulls. It's a high one. All inside bars are high ones or low ones. So when you have the big gap up, think of that as the bull spike. This is the pullback, and they're hoping the high one is the start of the channel. Now, high ones usually lead to deeper corrections and then trend resumption. So the question is this a bull trend, and are we going to pull back? So I don't think it's really all that great to be buying above bar two. It's a possible low of the day. Inside bars are the opening swing sometimes. I just have one specific example in here that I want to show. Well, this is another good example. The inside bar is the opening swing. Obviously, the context is different. This one as well, you can see the inside bar on the open, and that ends up being the opening swing. So it's possible that we end up getting this ends up being the swing. However, I don't really think it's all that likely, and it's probably better to wait for something higher probability. Sellers above two during bar three. Bar three, a big tail on the bottom and a big tail on the top. So not really all that great to be doing anything here. We're just oscillating in a tight trading range. You know the daily range is going to get a lot larger, so there's really nothing for you to do yet. I think most traders should just be flat. I still do think we're always in long from the gap up, but most likely we're just going to end up being pretty sideways here. Four, sellers above bar three, not that surprising. The bears, again, are hoping for some sort of lower high double top with yesterday's bar 40. And the bulls are hoping that obviously we had the spike and then the pullback on bar one, and now we're getting the bull channel up. So that's what the bulls are looking for here. So what is there to do? Well, I'm either looking for us to sell off and then get a reversal up, or get some sort of climax and then a reversal down. This was obviously more climactic than I thought it was going to be, but obviously bull surprise. So bar five, buyers below bar four during bar five. It's a doji bar. It's possibly a couple of pushes up. One is the gap, and then a pullback, and then two, and then a pullback, and then three. So theoretically, some sort of third entry sell for the bears below five, but no one, or below four, but no one wants to sell below four, a bull bar. So there are buyers below four, and we get a doji bar on bar five. Probably sellers not too far above, probably buyers not too far below. Six, a bull bar. It's not able to close above the bar four high, so I'm not really interested in doing much here. I'd probably just rather be flat. Again, the thing to keep in mind here is the daily range is 10, and yesterday the daily range was 80. So you have to figure the daily range today is at least going to be 40 or 50. I think it ended up being like 60. Yeah, about 60. So you know that the daily range is going to expand by 4, maybe 5 times. So there's really no rush to get into the market in either direction. It's better to just be flat until you see something that's relatively clear. Bar 7, a huge bull surprise. So a really big bull bar. There's a big tail on the top, so it's probably not as strong as it could be. But it is clearly a bull surprise. I think we were always in long on the gap, and we might just be always in long. What was I going to? That's not what I'm going to say. We were always in long from the gap, and we haven't gone always in short yet today. So we've been always in long. I don't know if there was a leg one, leg two. There might have been. So pretty close, right? If you use the gap. So from the low of bull spike, and then the gap is the first leg up. So you could argue spike and then a pullback bar one, and the quote unquote channel is the second leg up. And we ended up rallying to around that measured move. So 7, big bull bar, but a tail on the top. It's a bull surprise and it's going to get a second leg up. Also, the bears, if you look closely, the bears who sold above bar 5 and tried to scale in got trapped and they were never able to get out. So we actually didn't reach back to this high during bar 7. The bears got immediately trapped. And obviously, we created a second open gap when we got bar 8. So bar 8, an inside bar, a bull bar closing relatively near its high, but not quite on its high. So it is a high one for the bulls, but it's a little bit disappointing that there's a tail. In all likelihood, we're going higher. How much higher? You know that 50, 57.25 roughly is the all-time high. So we might be trying to make a run at the all-time high if this is going to be a bull trend day. However, if this is going to be a bull trend day, you're going to have a lot of other opportunities to enter. Yeah, it's okay to be long, but why are you getting, a big tail on the top of 8, and why are you getting a tail on the top of 7? And you can see traders were really only willing to buy the pullback during bar 8. They weren't necessarily as thrilled about buying at the high. So this is not as good for the bulls as it could be. It's still bullish, but it's not, I would say, high probability yet. 9, there's a big tail on the top. So I think 9 was an important bar. If you're a bull and you bought for any reason, you were hoping bar 9 was going to close on its high. 7 and 8 are good looking bull bars, but you're yet to get a really strong bull bar closing on its high. And that's what the bulls wanted out of bar 9. And instead, they get a bull bar with a big tail on the top. Pretty disappointing. It shows that the bulls who bought above 8 ended up making, I don't know if they made 10 points. I don't think they did. Yeah, they were unable to make 10 points. It needs to go 10.5 points for bulls to make 10 points. So they were unable to make 10 points. And if you're a bull and you bought above 8, you knew that there was a little bit of a risky trade and you want really good follow through. And when you get 9 as your follow through, what are you thinking? You're probably thinking, well, this trade is no longer good. I'm going to get out. And that's exactly what's causing bar 10. So the bulls, as we started to rally on bar 10, the bulls just decided to take whatever, a 5, 6, 7 point scalp and just exited at the market. And that's what's causing bar 10 to be such a large surprise bar. 10 is a bit disappointing, I think, for the bears. The bears were hoping that it was going to close on its low and do something like this, similar to this, where you got this leg up and then a big bear surprise closing near its low, and then a big follow through bar. We got a big surprise up and then a big surprise down on 10, except big tail on the top and a tail on the bottom. There are certain bears who are front running the sell on bar 10. So they're selling as bar 10 is pulling back. They're selling in this area, trying to get the market to close on its low. The reason being, if it does close on its low, you know that we're probably going to go a lot lower because that would be really bearish to get a bar that's closing that strong. However, if it doesn't close on its low, those bears are going to be pretty disappointed and quick to get out. So 11 is a lot of disappointed bears who were front running the first leg down for the bear, or they were front running this leg down for the bears, hoping that we were going to get a collapse. And instead, it closes disappointing. So a lot of them buy back shorts. Additionally, 6 through 9 is strong enough to get a second leg. Bears wanted a big enough bear surprise to flip the market to always in short and entrap the bulls in. And I don't think 10 is a big enough surprise considering it didn't close on its low. Had it closed on its low, it certainly would have been, but it doesn't close on its low. So it's probably not quite a big enough surprise to flip the market to always in short. So bears buy back their shorts and bulls will buy, maybe scaling in at 50% of the rally. So maybe they're scaling in somewhere down here. You can see we traded right back down on bar 11 to the 50% rally, and then we got a bounce. So bulls buying for any reason, buy more at a 50% pullback, expecting a second leg up. Bar 11 is the second leg up. It's possibly, though, a second leg trap. You can see bars 6 through 9 are not really that indicative of a bull trend. Bulls had a chance to create a bull trend if 8 had closed stronger, if 7 had closed stronger, especially if 9 had closed stronger, that would have been important. However, they really weren't. This really no longer looks like a bull trend. And then you get a huge bear surprise on bar 10. So all the bears or all the bulls are now really disappointed in 10. And so do you think that, if you're buying up here, your premise is that this is a big bull trend. Do you think that this is a big bull trend now? No, probably not. It's probably more of a second leg trap. And I've been meaning to put it in my second leg traps. Oh, I want to make a video on second leg traps. I'll probably use this as an example. There's one other one that I kind of wanted to show. What's today? whatever. I'll find some other time. But the next trading video I make that is not about that's not this, like my daily review or live trading, is going to be on second leg traps. Because I think they're really important and they're difficult. So if you bought above 11, your thinking was that this was going to be a big bull trend, and you have low probability because you're probably buying high in the trading range. You're buying a second leg high in a trading range, and your risk is relatively big. So not really that great to be buying up here. Traders instead, if you did buy, let's say you took it, you bought above 11, and you get 12 as follow through. How do you feel? Probably not very great about your follow through. A lot of the traders who are taking a trade like 11, if they get any sort of disappointment like they did on 12, let me get a sip of water real quick. If they get any sort of disappointment like they do on bar 12, they're going to immediately exit their longs. And you can see on 13, the bears who, or the bulls who bought were disappointed with 12, and 13 bounced a little bit and sold, and they immediately sold. And that's what caused 13 to close near its low, is the bulls selling out of their longs. So I think disappointing for the bulls. We're probably going lower. To me, this looks like a trading range. And if it is a trading range, what do trading ranges do? They close gaps. And so I am now looking. Is there a drawing here? No. Okay. I am now looking at the bar 6 and bar 8 open gap as a probable target for the bears and a reasonable spot to look to get to. So if you can sell below 13, you put a stop up here, risking 13, 14 points, trying to make about 20 points, and you probably have, I don't know, maybe 50. It's probably pretty 50-50. So it's reasonable to take that trade selling below 13. It's a lower high double top with bar 9, and the neckline is the bar 10 low. So some bears sell, taking a chance that we get a measured move down somewhere down here. Oops. So 12, a bear bar closing near its low. Bulls, if you're long for any reason, I think you have to get out below 13. And bears can take a chance and short below 13. Taking a chance, we've seen the high of the day, which we did. 14, follow through for the bears. It's consecutive bear bars. And there's a tail on the bottom of 14, making it not quite as strong as it could be. However, 12, 13, 14 is probably strong enough for a second leg sideways down. You got to imagine we're probably going to get a lower high. So even if we do trade above bar 14, there's probably going to be sellers above scaling in, betting we are not going to get to a new high of the day. 15, a reversal up, but really not all that great. The bulls are hoping that this is going to be a second breakout attempt of the high, but this is not a high probability trade at all. We're a little bit more bearish here. And then you can see this is bulls giving up. So the bulls who were long for any reason just used any sort of little rally they could to exit their longs, and that's what caused the huge dump bar basically on 16. The bears obviously were selling as we went down, and this ends up being the second leg. It's not really a second leg trap. This is more of a second leg trap. This is kind of just a climactic second leg, but you can't sell the close of 16. There's a huge tail on the bottom, and to me, it just looks like one pullback and then large climactic two second leg. You know the bulls who bought below the low today are probably going to be able to make money on limit orders. So it might be more of big up, big down, and big confusion on the open, something more like that. 17, a reversal up from the low of the day. It's a micro double bottom, 16, 17, and you can buy above 17 for a swing. I don't have a problem with that. What's your profit target? Or sorry, I was meant to say the opposite. Buying above 17 is kind of difficult, I think, after 16. 16 is a really, really strong bar. You can definitely take it, but the thing is, it's going to be a minor reversal. So you know that you're probably not going to get a huge trade out of it. Yes, the bar 16 high is a sell climax high. So we might have to get back up into this area or the bar 15 low. If you're buying above 17, you probably need a wide stop. So I personally just left that alone today. I did not buy 17. But the bulls, it's a lower low double bottom with one. They're hoping or expanding triangle open, and they're looking for some sort of swing up. 18 consecutive bull bars, 17, 18, big tail on the top, or tail on top of 18. Again, it's just not, is 17, 18 enough for you to say that we have undone, or we undid the damage to the bulls that 16 did? I think that 16 is so big that pretty much anything that the bulls try to do over the course of the rest of the day is probably going to end up being minor. So I don't see this turning into a big bull trend day. I think bar 16 solidifies this will either be a bear trend or a trading range day. And obviously it can end up being the trading range day. 19, an inside bar, a bear doji bar. So do you really want to buy above a bear doji bar? And you're buying basically the middle tick of the trading range. So do you want to buy right here? Probably not. It's probably not worth doing. So I think best choice here is just flat. A lot of the bulls who do buy above 17 are going to scalp out. So a lot of them did take the buy and they just scalped out with 10 points. 19, an inside bar, a high one, like I said, but I don't want to buy above the bear bar. We're probably going to get a second leg up from 17 and 18, but we're also probably going to get a second leg down from 16. So it's really not worth doing anything here. 19 or 20, a bull bar, there were clearly buyers at the moving average, but there's a tail on the top. It doesn't close above the bar 18 low, and we might just be trying to test the bar 15 low. The upside for the bulls is pretty limited here. So you just have to be thinking of it. The best case scenario for the bulls is we get somewhere up here, most likely. And then you can see much further down would be your stop. So the math isn't really all that great. I would imagine that the bulls on 21 bought around a 50% pullback of the leg. Yeah. So we've gone up this far so far in a bull 4-bar bull micro channel. There's going to be buyers below 20 or 21. Traders still think we're going to get to the 15 low or maybe the sell climax high, but they have a lot of problems with buying up here because the risk reward is not very good. So traders will buy the 50% pullback with the stop below here, risking 12 points, trying to make 23 points. So almost 2-to-1 risk reward. So that's a pretty reasonable thing to do. We have a big outside up bar on 21, a bull bar closing near its high. It's good for the bulls. It's a potential breakout. So this to me changes things a little bit. It's possible that we're going to get big follow through and start some sort of bull trend, but we need good follow through. The bears are hoping that 21 is basically just a second leg trap, first leg up from 17 to 20, and then outside up, second leg up, second leg trap, bar 21. That's what they're hoping. The bulls are hoping this is the start of a new bull trend, and we're going to start to rally from here. What's more likely? I think it's okay to take the buy, but you have to manage your expectations as well. If you're taking the buy above 21, you want 22 to probably look something like bar 7. Maybe take the tail off of bar 7, keep it basically pretend bar 7 didn't have a tail and it was this size, 18, 19 points. That's what you want. You want a huge bull bar closing somewhere up here. And you had a reasonably good bull bar for most of the bar on bar 22. However, it sold off a little bit and you ended up getting this tail on the top. And that, to me, is disappointing enough that a lot of traders are going to exit. Something to keep in mind is we are at a weird time of the day. Usually, you try to get a reversal around bar 16, 17, 18, 19, 20, something like that. And if the market is in a trading range for the opening couple of hours, you usually try to get a breakout sometime around bar 30. So you have to keep that in mind. You can see the breakout started 27, 28, 29, 30, and then we got a breakup to the downside, failed, midday reversal. But anyways, so outside up 21, bull bar closing near its high. You can take the buy, but if you take the buy above 21 and you see 22, tail on top, I think that's a disappointing bar. And I think you should just get out. Some bulls, they see it and they can get a little bit more than 5 points. I don't know if 5 points is that reasonable of a scalp on this day. I don't know if those traders were ever able to make 10 points. So look, actually, right around the high of 27, and if you bought, did it go 10 points? Hold on. 4.75, 54, 525. Okay, so the bulls who bought above 21 were able to make exactly 10 points on 22. So what happened was the bulls who bought started to become disappointed in the bar and they just scalped out with 10 points up here. So the bulls bought and they scalped out rather than buying and holding for a swing. The rest of the bulls saw that those bulls were scalping out and got a disappointing tail on 22. So a lot of them just exited at the market. I think that's what's causing 23. You could argue it's big low 2, below 23, but no one wants to sell below a bear bar with a giant tail on the bottom. It's probably better just to be flat. We are probably going to get a second leg up from 22, 23, which you can see we got on 24, testing back to the bar 22 close before starting to go sideways. So we have outside down on 24, but really not very good. At this point in the day, you have to realize that we're in a tight trading range, or not a tight trading range, but the whole day is basically just a trading range. And it's hard to look for swings up or down in this kind of scenario. For me, I thought there was a little bit more of a downside bias. I thought it was a little bit more likely we were going to go down because of the context of the daily chart and because bar 16 was so strong. It was the biggest bar we've had in probably a couple of weeks at least. And it was just such a large bar that I thought it was going to get some sort of second leg down. So I thought it was a little bit less likely that we ended up getting some sort of upside breakout because bar 16 makes me think it's a little more likely we're going to get a downside breakout. An inside bar on bar 23. So it's an IOI pattern, inside, outside, inside. So 23 is inside of 24 and 25 is inside of 24. breakout mode pattern, high in a trading range, generally 50-50 chance the first breakout in breakout mode fails. So I would not be surprised if we end up, it might even be higher because we're at the top of the trading range and we've had 3 pushes up. However you want to count it, 1 pullback, 2 pullback, and then 3. So you're not buying above 26. That's a third push up in a trading range. Again, it is breakout mode, but 26 is not convincing me in any way that I need to be long. I'm probably instead looking for a failure and some sort of surprise. Usually, a lot of times in these trading ranges, you look for something that catches your attention, something surprising, and I think 27 was that. I thought, I was disappointed that 27 was unable to close on its low. I thought it could have led to a bigger swing had 27 been able to close on its low. But instead, traders bought back shorts around the moving average. So some traders just ended up scalping out. Maybe they were limit order traders and they sold the high of the IOI, or they sold above 26, being willing to scale in, betting that we're not going to get an upside breakout. And some of those traders took profits at the moving average. So a bit disappointing for me on bar 27. 28, also disappointing, a big tail on the bottom. It's probably still credible to be short. I think 27 makes the market always in short. So some traders will sell below it. However, it might end up being more of a scalp than a swing because of how disappointing these bars are. And when you start getting reversals up like this, they keep not triggering. So bears kept selling well, I'll just get there, but kind of fascinating what's going on in here. So 28, disappointing, a tail on the bottom, but it's a bad high 2 for the bulls. Bulls are hoping that we had the rally up to 22 is the start of a bull trend. We have a high 1 on 25 and a high 2 on 28, but I don't know, really not worth doing anything. Probably sellers still have scaling in higher. 29, a bear bar, but a tail on the bottom. Is it sell to close? Probably. That we're going to get a second leg down, and 27, 28, 29 is going to get a lower high. But I'm personally going to wait until I get a bear bar closing near its low to look to short. 30 is that bear bar closing near its low. You can see we started to rally on the tail of 30. So 30 is overlapping with 28 and 29, but credible to short below 30. Are you selling? I think it's reasonable for a swing. I did take it. I thought it was a good swing trade. But the thing you have to keep in mind is that there's a tail on 27, 28, 29. So the start of this is not that strong. Usually good trends start with good signal bars, and this isn't as good as it could be. So this whole thing might not be as good as it could be. 31, we're breaking out to the downside. So good for the bears. We tested back to the bar 16 close. You can see we closed right at the bar 16 close. So we found some profit taking there. The bears, what do they want? You kind of want a little bit of a collapse. You want a strong breakout to a new low of the day before you get any sort of pullback. So pullback here would not be great. And then you get a pullback on 32. 32, head and shoulders pattern, 1, 2, 3. You can just argue it's a wedge, some sort of truncated wedge. That's fine too. Do you buy above 32? I would not. There's way too many bear bars in a row. Do you exit your longs above 32? Yeah. Exit your shorts above 32. I think it's pretty reasonable to exit your shorts above 32. And so this is what traders do. They know that if they're short for any reason or they're not short, they know that if they sell here, sell the close of 32, they're going to be risking basically 1 point. So they know that bears are going to exit above 32. So what they'll do, you can see we got a micro gap down on 32 into 33 because bears sold the close of 32, and that caused the small gap down. They sold because they can just put a stop right here, and worst case scenario, they lose 1 point. And in this case, if they did that, you can see they were able to make 10 points during bar 34. So that's exactly why we went down 10 points and reversed back up. Bears were hoping to get a swing out of it. However, they ended up only getting the 10-point scalp. But if you're risking 1 point and you're trying to make 10, your risk reward is really, really good. So, it only has to work 10% of the time, and you're probably going to win this particular trade, I don't know, maybe more like 20 to 25% of the time. So you have really, really good risk reward here to take this sort of trade. Some bears were hoping for a swing and they sold, and some bears scalped out with 10 points, and others were disappointed with the reversal up on 34. So same process. Traders are going to sell the close of 34, basically betting that that's going to be disappointing, and they did so, and they were able to scalp out with 10 points again on bar 36. But once you get these two reversals up, to me, this is probably going to end up being more of a leg in a trading range. So we're probably not going to get a big bear trend out of this anymore. So that is another reason, once you see 34, why bears ended up scalping out once we traded back down to the new low, is because this is going to end up being a leg in a trading range because the bears are not doing what they need to do. we don't have a great sell signal bar to start the trend. 27. It's a good bear surprise, but it's not closing near its low, and we're getting multiple reasonably good looking, or not good looking to buy, but just reasonably decent reversals up. So I think traders are going to look to scalp out as low as possible. And that's exactly what's happening down here. 35, the bear bar closing near its low, an inside bar, a low one short for the bears. Still bears selling to close 34 and creating 35. 36, another bear bar, but a big tail on the bottom. I think the bears need 36 to close on or near its low. And instead, it has a disappointing tail. So a lot of the bears, they see this and they'll just decide, I'm done with the trade, and they'll buy back their shorts, and that's causing 37. It's a possible wedge, 32, 34, and 36. So it's possible we have a wedge here, and the bulls are looking for some sort of reversal up. However, I don't really think I want to buy above the bear doji bar. So I am looking for some sort of reversal up, but I probably want to try and get some sort of lower low first. 37, a bull bar, but a tail on the top and a tail on the bottom, not really worth doing anything. And then 38 trades up to above the bar 32 high. 32 is the high of the bear channel. So we have the spike, and then this is the pullback, and then this is the channel. And the tops of channels are magnets. Usually, if it's going to be an effective bear trend, it will not pull back this far. So that's one of the reasons why this is more climactic, is because we tested above this and created a higher high double top. To me, I think that, if we were going to sell off, we would not have gone above this high, and we probably never would have even gotten bar 37. So I'm probably not going to, you're probably not selling thinking that you're going to get, a massive swing to the downside. A lot of the traders do sell, basically because they got trapped out, and they'll sell again, still always in short bear bar closing near its low, higher high double top, and they'll sell, but then they get a quick, do they make 20 points? Yeah, they're able to make 15 points, but you sell below 38 and you get a quick 15 points on 39. Those traders are probably going to buy back shorts. So disappointment on 39 with the big tail on the bottom. But to me, this is a really climactic bar, and we're probably going to reverse up pretty soon. 40 is a possible wedge, maybe 117 and 40. It doesn't line up. It's an overshoot, obviously, but that's one way to draw it. You could say, we have a wedge in here, something like that. The more ways there are to draw a wedge, you could say bar 6 or bar 5, something like that. The more ways there are to draw a wedge, the more likely it's going to succeed, because the more algorithms are going to see it as a wedge. So 40, it's a midday reversal. There is a tail on the top, which actually made me hesitate, and I was not able to get filled in the trade. So disappointment on 40 with the tail on the top, but still the context is really good, and it's a small bar near the bottom of the range. So sometimes in trading ranges, you're not quite going to get the bars you want, but they still end up working. So midday reversal, wedge, sell climax 39, bear trap, reversal up 40, 41 consecutive bull bars closing near their highs. So some traders, they don't want to buy above 40. They'd rather wait for follow through. And then you get 41. So some traders would buy the close 41. Once you get 41, I think we have seen the low of the day. And if we do pull back, we'll probably end up getting a higher low. So some traders will buy the close of 41 with a stop below 40, betting that they should be able to scale in, worst case, and make money. I think a lot of traders want a pullback to happen. And usually when a lot of traders want a pullback to happen, it doesn't end up happening, because everybody is buying at the same time, trying to establish a small position. But when too many people establish a small position, it drives the market higher. 42, another bull bar. So we have tails on 41 and 42. So maybe not quite as strong as it could be. It's still probably a leg in a trading range, but trading ranges still should test back to the apex, or the midpoint of their trading range. And you can see we kind of oscillated around the midpoint a little bit. 43, an inside bar. So it's a high one for the bulls and a low one short for the bears. The bears are hoping some sort of wedge, 1, 2, 3, but no one wants to sell below a doji bar after this many straight bull bars. So it's probably more of a pullback and a high one, but it's not a strong high one. You remember that first off, high ones are usually only okay in the spike phase of a bull trend. And you could say we are in the spike phase of a bull trend right now. So I think it's reasonable to be long, but I'm not looking to add to my position above 43. So if you are long, probably still pretty wide stop right now. You can put a stop a couple points, maybe 5 points below 42 or something like that. But I would probably just have my stop below 40 at this point. And once if we trade up above the bar 42 high, then I would move my stop to below bar 42. So pull back, so maybe spike, pull back, and then channel. So this might be the bottom of the channel. If we come back and test this area sometime next week, it wouldn't be that surprising. Sellers above 43 during 44. There's a big tail on the top. Again, we're starting to go a little bit sideways here, but I think we are still always in long. I think 41 made the market pretty clearly always in long, and we haven't had a bear close since then. 44 bull bar, but again, so like I said, a tail on top. Bears want double top, 42, 44, but really not that good. There's going to be buyers below, and you can see we get buyers below 45 and a bull bar closing relatively near its high 46. You could argue that this is a high 2, I suppose, but we got a higher low from the bar 41. You can look at it as a high 1 or a high 2 either way. It's got a tail on the top, so it's not as good as it could be. It's mostly a doji bar, but we're still always in long and probably going higher. The context supports a bit more of a rally here. 46, another bull bar, but a tail. So again, this isn't rallying in the way that this is going to become a strong bull trend. It's rallying in the way that this is going to become a leg in a trading range. 47, a bull bar closing relatively near its high, but still a tail on the top and the bottom. It's not as bullish as it could be in this area. More follow through on 48. So a lot of straight bull bars, right? We've been trading below bars. We traded below 44. So it's not necessarily a micro channel, but it's a good streak of bull bars. So we're probably still going at least a little bit higher. And if we do start to sell off, the bulls are going to get a second leg. 49, a tail on the top and the bottom. Still probably buyers below. Bears are hoping some sort of parabolic wedge, but no, you're not selling here. Outside up 50, bull bar, but tail on top and bottom. And then follow through 51, bull bar. But, I don't know. I think 51 is a really climactic bar. So if you're buying up here, you got to be careful. Again, you got to be thinking about when the bars start getting smaller and then suddenly you get a big bar, it usually is going to be the climactic bar. So to me, it's a breakout above a bull channel. It looks like a trap. A lot of traders end up exiting, and that causes 52. But buyers below 51, obviously scaling in lower. If you're going to buy the close at 51, you probably have to have a stop below bar 45 or 42, something like that. A stop below 50 doesn't really make a lot of sense. There's probably going to be more buyers than sellers below there if we do get there. So 51, a bear bar. You can see traders were willing to buy below 51 during 52. We're probably going to get a second leg sideways to up from this. However, this was, the 12 bars. So we're still going to end up going sideways for probably 10 to 12 bars before you get a second leg up. It's exactly what happened. We ended up going sideways for a little more than that. But yeah. 53, a bull bar, but a tail on the top and bottom. I'm not really sure it's all that great. Again, we're still always in long. We went back to always in long here, and we stayed always in long the remainder of the day. But it's not really that ideal right now. You're about to hold through a bull flag if you're deciding to hold. The bears want, instead of a bull flag, they want the market to go sideways and maybe get a failed breakout to the upside and a reversal down. But you can see it just ended up becoming a bull flag. 54, tail on the bottom. Second leg down from 52. So 52, pause, 52, pause 53, and then second leg down 54. Traders buying back shorts. Bull bar closing near its high 55, but we haven't gone sideways long enough for me to think that we're going to start to rally here. So I think that we might rally back up to the 51 close, but we probably need to go sideways for more bars before we start to go up higher. 56, the doji bar, basically. Disappointing if you bought above 55 to get bar 56. So really not that good. But 55 was strong enough for a second leg sideways to up, which you get on 57, but still tail on the top and the bottom. This is not as good as it could be. 58, an inside bar, or not quite an inside bar, sorry, but a doji bar. Again, we're just getting basically doji bars here. We're going very sideways. I don't really want to do anything personally. And you can see we trade below 58. It's maybe a micro wedge, 53, 55, and 57. And so 58 is your sell signal bar, but you don't want to sell a doji. So you can see 59 tests back down to the bottom of the tight trading range, a failed breakout below. Maybe we try to break out to the upside, but are you buying above 59? No, it's just a doji bar. 60, you can see sellers above 59. Traders probably more interested in buying a pullback of 59 more than anything. It's a pretty big reversal up, even though it's not a very good bar. 61, a bear bar, but a tail on, 60, a bear bar, but 61, a bear bar, but 60 is your signal bar. So I don't know, this really isn't all that great. Probably buyers below scaling in at the moving average. You can see we ended up forming a wedge like this, 1, 2, 3, and got a failed breakout below and then a reversal back up. So 63, failed breakout of the high. We might try again, which we did on 64, It's a micro wedge, 62, 63, 64, and a bigger wedge, 1, 2, 3. So maybe some sort of nested wedge there, but really not worth selling, I don't think. We're still channeling upwards, and we're still finding buyers at the moving average. So it's really not as good as it could be for the bears. 65, bear follow through, but probably buyers below 64, but still a third reversal down. So you have to be a bit cautious. And then 66, a big bear bar, but a big tail on the bottom. So not really that great. You follow through 66 and 67. Yes, bearish, but huge tails. So it's really not worth doing. And then you get a bull bar closing near its high on bar 68, closing above the moving average. So for me, it's a wedge, 1, 2, 3, and we have a failed breakout below. And now we're getting a reversal up, bull bar closing near its high. We've been always in long the whole time. And this is probably just a bull flag, and the bears just failed at their chance. And now we've gone sideways long enough that I think it's reasonable for us to continue higher. So I think 68 is a credible buy. Get followed through 69. We're probably going somewhere back up into this area towards the top of this sell climax. We did test the actual high of the sell climax, but that is roughly the area where we're trying to test. 69, bull bar, but a big tail on the top. An inside bar, high one by 70, but I'm not really willing to buy this high. I think if I'm buying here, I'm probably scalping out somewhere up in here. If you get a big move like this towards the end of the day, it's a lot of times just better to take your profit, but it's okay to hold. I'm trying to maybe test the bar 26 high. The reason the bar 26 high is usually, you get any bull bar closing near its high in a trading range day, it's going to be a target for the rally later. So that bar 26 was going to be a target when we started to rally towards it. 71 and 72 consecutive bull bars. So we have 5 straight bull bars, but not really all that great. And then we got 3 straight bear bars, just profit taking. And then a big reversal up 76, hoping that 73, 74, 75 is a bear trap. We can undo it with 76, but traders ended up just scalping out 77. They seemed more interested in buying a pullback of 76. I don't think they got the 50%. Yeah. But they were more interested in buying a 76 pulled back in around the moving average than they were buying as we raced up above 76. You can see that from the tail. So to me, although yes, looks bullish, this tail is a bit of a problem, and it's one of the reasons why bulls scalped out. So for stop orders today, I thought the first reasonable stop order was 13, maybe 8 if you're fast, but I don't know. I would not take that. It's not a great trade. I thought the first reasonable one was 13. 17 is probably a minor reversal, but you can do it. 21 is fine if you get out up in here. You can't do it and take a loss. If you bought this and you took a loss down here, then you probably shouldn't be taking this type of trade because it requires quick management. Probably sell to close 29, but not great. And then you can sell below 30. Probably get out somewhere in here, or if you're lucky, you get out down here, and then you could probably sell below 38. Higher high double top, but I just don't think it's like the best trade. So I would personally wait on that. And 40 is a midday reversal. That's credible. You can buy the close 41, 42. You can buy above 45, or any of those bull closes really you could just buy. And then, but some of them not that great. And we have the bull flag. I would not do anything until 68, but you could buy for, easy limit order 44, probably easy 49 as well. And I think that I had one other, for always in. We gapped up. We think we were always in long. And then 13, probably, we were always in long up until bar 13. I think the bars were still always in long on 13, but context was a little more always in short. And then when we became clearly always in short on 16, well, it's a trading range. So that's right when it's going to reverse. So we start to become always in long. And then I think here we become clearly always in long. If not here, then here we become clearly always in long. And then it reverses. So probably back to always in short, 27, 28, 29. And then always in short up until 41. You get out here, bars are probably about to flip to always in long, but it's always in long 41 by the close, and we stayed always in long. On the daily chart, we have an IOI pattern, which is a final flag. So we're in the area of a bull final flag. Obviously, bulls are hoping this is a spike, and then we have a pullback, and we're going to get a channel. It's possible. The bears are thinking this is a final flag. So if we get a breakout above, they're hoping for get a reversal back into this area. We might have to test the all-time high because we're getting very close to it. But if we do get a breakout above, the bears are going to try and make it fail and test back into this final flag. The weekly chart, really strong for the bulls. We have 3 straight bull weeks. So that's pretty unusual. After, basically this climactic of a move to just get a straight V bottom would be pretty unusual. 30% of the time when you have a sell-off like this, the second leg comes after you test above the high. So we might have to test up here before we reverse back down into it. And then the monthly chart, I think next week is the last week of the month. So the Bulls are going to do their best to make this month close on its high, and the Bears are going to do their best to put as much of a tail on the top of this as possible. Still, the open of the week of the month is less than 100 points away, which we can very easily cover in a day. So that is something to pay attention to sometime late next week. All right, that's the day.